everyone, John Henry here, SlingshotFutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Welcome back from the weekend. Hopefully everyone had a great weekend and was able to rest up a little bit. I know it got a little bit crazy on Thursday and Friday, some pretty good trading there. And today really wasn't much different. We had some pretty good movement throughout the day. Unfortunately, most of it happened towards the afternoon session, but still, got some pretty good movement overall and definitely not going to complain. Now, before we start jumping in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up with us in the email list, so you'll be notified every time one of these videos comes out. Along with that, in the email itself, not in the video, in the email itself, we go over all kinds of cool things like different stocks that are setting up, different options, futures, forex, cryptocurrencies, you name it. If it's moving, it's probably going to show up there at some point, so it's a great newsletter to get your hands on. If you haven't done so already, make sure to click on the live trade room subscription and trial info, and from there you can sign up for a 3-day trial to hang out with us for a couple days in the live trade room. You'll be able to see the screens, what we're doing, how we're trying to find our trades, what all is going on. It's just a great way to see if it's something that you're interested in, if it fits your personal trading style. You can ask questions, you can hang out with some of the members. Overall, just a really cool experience to get your hands on if you haven't done so already. Now, like always, we'll start off with the euro here, and the euro has had quite the rip higher. They had a little bit of a dip down into that 7,500 area and then just rocket shipped right back up. 3/4 of the way to 1900. I mean, it's just a monster rally higher. And really, if we zoom out, we can see that they're trying to break out above this range that we've been stuck in for a little while now. It's been grindy and slowly moving its way down, but this most recent failure down here, with that failure of continuation and then an immediate pop back higher, we're seeing the buyers show up with some pretty good movement to the upside. We could even be looking at a slightly larger bull channel, something like that, which may be why we're putting in a short-term top here. But really, we're trying to break out of the earlier range, and with that momentum to the upside, we're looking to buy pullbacks, but we have to be, because we are in an area of resistance at those wedge highs, we don't want to buy too high. We want to buy in an area that gives us room to still potentially make some money on the trade, rather than buying at the highs and hoping for a couple ticks. So I'm looking for a slightly deeper pullback. The first one's going to be at 18,160 to 165. We may not be able to get that low. If you're aggressive, there is an area that we're pulling back in for an opportunity around the long side at 18,260, but you know, I would really like to see a slightly deeper pullback if the market is feeling kind. Now, if we can get a little bit further down, 17,968 would be the next area. And really the primary objective here, either buying off of there, buying down here, or both, is still just looking to come back to the highs where we found a good chunk of resistance at 18,420. So for the most part, we are bullish. We're trying to break out of the earlier range that we've been in for the last couple weeks, but we want to buy as cheap as possible, meaning that we are waiting for a pullback. Over on gold, fairly decent upward momentum, a little bit more consistent than the euro. The euro kind of happened all in one big spike. Gold just kind of ground its way up most of the day. Now, we are finding a little bit of a range with a high kind of area and the low area. The low area between 94.3 and 95.1, the high area at 98.5 and 99.7, and of course you can't forget that big round number 1300 right in the way, something to definitely keep our eyes on. Now if we zoom out a little bit, we can see that they are coming off of the backs of that deep pullback that came back down and just barely nicked the low of that, more likely a little trap bottom, and now we are pushing back up again. So the primary objective for a lot of buyers, especially on this kind of rally, they're going to be buying into the pullback day and then hanging on for another leg up. There are going to be late traders to this party who are buying up here, buying up here. They're the ones that are coming in late. Now, a lot of times, even though they're late, they may still be fairly well capitalized, and for the most part, they're going to be looking to buy deeper pullbacks. They're going to want to try to buy cheap to bring the average position down a little bit. They don't want to get stuck on sitting on this massive position way up at the highs. It doesn't make any sense. They're going to be buying cheap and buying that trap low. That makes a lot of sense, and there are likely a lot of buyers that accumulated that low quite aggressively, and now their objective is back to those highs again. We also have last week's high at 6.9, not too far away. So a lot of buyers will likely be buying into this dip lower, any subsequent dip after this, to try to continue to go back up towards those highs. Anywhere from probably around 1304 and a little bit higher is where that resistance of those buyers beginning to exit is likely going to start stepping up. Now the overall movement, because of that sort of trend in play behind the scenes with buyers trying to mitigate loss and buying cheap, we want to buy along with them, but we want to buy it cheap as well. We don't want to buy way up at the highs hoping it goes a little further. So I'm looking to buy the range lows of this. As with any range, even if it is a range within a trend, you're looking to buy low, sell high, stay out of the middle. Right now we're in a bull trend. We have a little bit of a range forming. I'm looking to buy low. So 95.1 and down to 94.3, or a little bit below that, is a definite area of interest to begin buying in for an opportunity to push back up and finish that objective off. Over on crude oil, pretty much everything they did on Friday, they gave it all back. We pulled back very heavily against Friday's move up, and now we've taken almost all of it back, a good 75-80% of the move at least, on a very aggressive bearish turn. Now the bear turn down that we are seeing, we are beginning to cycle here off of the top of the channel. Fairly decent resistance coming into play, but the one thing that really stands out here is the simple fact that they just overextended themselves. They had a beautiful push down, another great test, and then they put the pedal down a little too far and ran out of gas, right? Whenever it runs out of gas, it's got to back up and go back to the gas station to find a little bit more. Now we may be looking for some resistance and a push back down, and that definitely does appear to be the case, but don't let it slide out of mind the fact that we did blow off through the lows, and very frequently you'll see a fake move before popping higher to equal out this breakdown to a break up, and then roll over and get the move down. So although I am still looking short, I'm a little bit kind of skeptical of this original turn down here. It just doesn't seem to fit the bill in terms of that earlier over push, the overdone move on the sell side. So really what I would like to do is see a small little trap, see them break out, and then look to sell it for a rollover back down to the lows. That area of resistance, first of all, 47.85. If they do end up getting some legs with sellers maybe running for the hills a little bit and breaking their earlier short positions and kind of shifting gears to the long, i.e. exiting, I doubt they're going to be reversing, but 48.06, 48.26, and 48.52 are all levels of resistance on the way up if the market wants to pull back a little bit further. 47.85, maybe 06 is likely going to be about all they're going to have in the tank before it starts rolling over, but you know, for the most part, we have some options to work with. Over on the S&P, pretty range bound, not really doing a whole lot today. We did miss the highs. If we look here, we had a very nice high put in, a new low. They tried to get a new high, it failed, pushed down to a new low again, and now we're breaking to a new high and a higher low. So we are getting a little bit of a shift here, forming a wedge, and that wedge is coming into play pretty nicely inside here. It's almost a perfect looking wedge. You can't really ask for a much better looking wedge than that. But if we zoom out a little bit, we can see that this is the same kind of spike in channel down that we've been dealing with for the last little bit here since Saturday going into Friday, and Friday going into Saturday and now into Monday. We're not really getting that continuation of the downside, and every time they try to, it gets weaker and weaker. The original attempted breakout was right there. It was very short-lived and reversed right back up to a new high. Obviously, sellers saw that as an opportunity to sell in and drive down to a new low. But because sellers are selling up here, they're going to be looking to take profit at new lows, and that looks like that is exactly what happened in terms of the breakdown failing once again. So if we do get another cycle to the downside, chances are it might not even be able to break down through the lows, and it might just get hung up at this earlier level of support at 24.19 half or so, maybe a little bit below that. So we know that sellers are likely selling in. They're selling previous swing highs, they're selling, fib retracements, whatever they're selling, but they're selling higher prices. They don't have any conviction to the downside, and in fact, that's where all of them are exiting, forcing a huge amount of buying pressure at the lows and knocking the market back up again. So what we're looking to do is sell high. We don't want to sell low because there's just no follow-through anymore. So what I would really like to see is either the overnight high being broken for potential opportunity to sell in and drive down, or if they really want to dig up, we have yesterday's high at 39.5 that could easily become a nice area of opportunity for sellers to drive down there as well. Either way, we're looking to sell high in this kind of move because the downside movement is likely limited, and we need to kind of get the probabilities in our favor a little bit. So that's the outlook for tomorrow's trading. Now, tomorrow being the 22nd of the month. In terms of news, there's not really a ton. At least it's better than today. Today had no news. Tomorrow has no U.S. news, but we do have at 5 o'clock out of Germany, we have the German ZEW economic sentiment for August forecasted at 15. The previous is 17.5. And then we have at 8:30 out of Canada, the core retail sales month over month for June, forecasted at 0.3%. The previous was a negative 0.1%, so a little bit of a difference there. No big U.S. news tomorrow, though, so we may have another slow, grindy day. That said, today didn't have any news other than small news, and we had a pretty good day of movement. So, I mean, my fingers are definitely crossed we get some better movement tomorrow as well. But for the most part, not a ton to really worry about tomorrow's U.S. session in terms of news. So that's going to do it for this one. As always, like we always say, make a plan, trade a plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.